Hello and good morning, listeners. It's the European Central Bank meeting day, a day for ECB to stomp and assert its influence against inflation and the whole host of macro instability as per many market participants. This is Swaraj, your host, bringing you Almus Market Mornings, your fresh brew of global financial updates. Markets are expecting a good 75 basis hike by ECB, something which has been unseen in the past 2 decades with an aim to bring down inflation. JK, we'll need your take on this while we also see oil prices correcting quite significantly, which is a positive news for the sticky Indian trade deficit. Markets were seeing rejoicing this move in oil as equities across rallied to some extent. JK, what do you have to say? What updates do you have for us, and what are your expectations with the ECB meeting?
Yeah, good morning. So let's start with the ECB expectation itself. So we know quite a few ECB members recently got a lot more hawkish than they were earlier. And it looks like both UK and Europe are now veering to the approach of, you know, putting rates higher and arresting the weakness in the currency, which will also help the inflation to be moderated. This is the right time to do it because inflation itself seems to be kind of starting to ease a bit. If you look at oil price, that's an indication that going forward inflation can be lower. Secondly, in UK, they are already coming out with a package of measures to reduce the energy costs. It can be in one of the two ways. If it is through direct subsidy to the consumers, then it can be more inflationary. But the other alternative that is being thought is to keep the input prices lower for the producers of energies, which will be much lower. In either case, I think a 0.75 hike, even in UK, is very much on the cards when they meet next Thursday. Of course, this Thursday, today rather, ECB is meeting, and ECB is also in a way, prepared to hike in a hefty way from 0 to 0.75%, and keep the euro, away from falling more. And that's one. With one shot, they could probably achieve the twin objectives of controlling inflation as well as the currency fall. Also, you should remember that European countries are also gathering tomorrow to address the current crisis coming out of the energies. So it's a confluence of approach by both UK and ECB, where you will see rates hiked probably by both at a 0.75%, and then addressing the energy issue directly, and then thus bringing down the inflation. And what better time than when the natural gas and the oil prices themselves are showing some decline. So that's my take. Be prepared for hefty hike, and then some sort of recovery in the currencies as well. And in any case, sticking with the currencies, we actually have seen most currencies at very, very crucial levels: 1.14 on the GBP, 0.99 just below parity on the euro, all of which have lost more than 25%. Then psychological 145 for the dollar yen, and more importantly, the 7 mark in the yuan. All these places, the central banks, I already mentioned about ECB and UK, Japanese officials are also expressing more concern about the currency's one-way movement. Now there are more views emerging that an action may not be too far away on the currency. Also, if you look at yuan, while the actual market is trading closer to 7 or maybe a little bit lower now, the fixings have been much, much lower. That is a real official indication that they are not encouraging the current weakness in the yuan. So we are really at an inflection point. Like New Zealand dollar also traded just below 6. That's again a psychological mark. And Aussie dollar 67. So I think we are seeing more and more concerns from the central banks about the weakness in their currencies, and probably that is happening at a time when conditions might also help them, because as I see it, inflation may be starting to moderate a bit, and and currencies having gone too far, it may be right time for seeing some sort of uh, pullback in the dollar on the downside. Even yields yesterday fell down a bit, uh, starting with the UK, where the yields, two-year yields fell by 20 basis points. That's a massive drop. And then in Europe also, the yields, two-year yield fell by 6 basis points, although it ended only 3 basis points lower. In US, 2 years fell from 3.50 to 3.45. So that's also another point which supported the dollar to come down a bit. Market obviously ignored the hawkish comments from Mr. Barkin and Brainerd yesterday. They would probably like to hear Powell today, who is expected to speak at virtual Cato Institute monetary conference on state of the monetary policy. So that is one event where Powell may have to, he cannot obviously backtrack on what he said in Jackson Hole, but market would obviously look between the lines, what he means, particularly in view of how the economy is doing, etc. Even if it does sound similarly hawkish, I don't see. I don't see dollar, making a new rally, because now the focus is more on what other central bankers are doing. Like yesterday, Canada also hiked by 0.75%, but probably through a small hint that it may be going forward, they may not be need to hike so much. That's what we heard on the market. So dollar, as I said, is definitely was at an inflection point, and still at an inflection point from where we could see some good bounce for the currencies, at least as they are continuing to be oversold. Market, of course, has already priced in a 0.75% hike by ECB. Of course, in the stock market, we did see a recovery after 4 weeks of relentless selling. And once again, I would pin this recovery as a correction and not a change of trend, with a sharp sell-off, which we saw post Fed members' statement, Jackson Hole speech, and the jobs report. I think market seems to have discounted even a 0.75% from Fed also. So the focus really for me for the US market is the near-term Powell speech, which may not be too different from what we have already heard from him. Then the inflation data next week on the 13th of September, and then the Fed policy rate decision on September 21st. So these will be what the market will be looking forward to. With quantitative tightening also in the pipeline from this month at double the pace. I don't think stock market will have best of the times for some time at least. Oil price, of course, I think more of selling based on the slowing global economy. So we are at 88 now on the Brent. That's a big drop yesterday. And technically 85, 86 should be seen as a good support for the Brent, and 80 levels on the WTI also should be a very good support for WTI. And looking at rupee, so far we have seen it outperform. And in fact, it has ignored the weakness in all other currencies, including some of the Asians. And RBI has held up their stance of defending weakness beyond 80 very steadfastly. Will they continue to do that if our DXY rises more? That is a big question for me, because we need to consider if the reserve depletes more, or rupee gets more uncompetitive against other currencies. Like yen, we are at multi-year low as far as the yen INR is concerned, and we're not too far away from similar lows seen in euro INR and GBP INR. One needs to consider our export sector as well if rupee continues to post such strong gains against these currencies. So what can probably happen is if the dollar does have a downward correction against these major currencies, the rupee will not gain to the same extent, and it will allow the correction in these cross INR pairs, to take place from their extreme levels. So that's what I'm seeing. So brace yourself for ECB meeting decision and then Powell's speech today. Those are the main events that we are looking forward to. Yeah, just before we close, I just want to point out an interesting development, particularly on the global trade front. We had trade data announced by US, Canada, and China. In all the countries, I have seen the total trade has actually fallen quite a bit. In Canada, in the US, total trade, I mean the import plus exports, has fallen to 558 billion versus 667 billion on a monthly basis. Then Canada, from 135, it has fallen to 132. In China, exports have fallen 18%, and imports have also, exports have risen only 7% versus 18% last month, and imports were just 0.3% versus 2.3% rise seen earlier. So there is already an overall impact on the trade of globally, because of not only the supply chain issues but also because of the slowing economies and perhaps the inflation and a strong dollar as well. So these are things that could actually be in the eyes of the policymakers and perhaps Fed also in the currency policy. Just to add one more thing, the Fed's Beach Book also yesterday indicated the future economic growth to remain extremely weak. So this is just what I wanted to point out, because these are the things that could probably hold the policy approach in the coming days. Yeah, thank you.
Thank you, JK, for that detailed coverage. And it's very interesting, isn't it? Sometimes market gives different weightages to the statements made by different Fed officials. Sometimes it just wants to listen to Powell. Of course, Powell being the head, the weightage will be the most there. So 75 basis on cards, even for UK, as JK mentioned, as commodities like oil, which contributes to the inflation, seems to be easing. So we also have the European leaders addressing the energy crisis tomorrow. And as JK mentioned, for currencies, we are at crucial levels, which will be looked at across the board. That's it from us today. Keep following us for more updates. Keep managing your risk. That's it, and see you all tomorrow.